Welcome everyone to this video on why I like real estate now. I'm recording this January 7th, 2025, so that you know what now means. But yeah, I really like investing in real estate now. In this video, I'm going to show you that I believe that the stock market in the United States is overvalued, it's overpriced. I'm not saying it won't keep going up. I'm not saying it can't keep going up. I'm just going to say that, hey, for what you pay and what you get right now, I think it's overvalued. And I'm going to show you three charts, three reasons why you can agree or disagree with me. And then I'm going to tell you why I love investing in real estate. Hey everyone, my name is Brad Reed. You can email me, bradreed@winwinfinancialsolutions.com. This QR code in the lower right hand corner, if you scan that with the phone app, the camera app on your phone, it'll take you to a form where you can send me your information if you're interested in learning more about investing in apartments with me. I'm also a residential realtor in the state of Indiana. So if you want to buy or sell a house in Indiana, you can also use that form, that QR code down there. This is my guide for investors, analyzing apartment building investing, and welcome. Thanks for coming. This is not financial advice. This is for education and hopefully entertainment only. This presentation does not constitute or contain any offer to buy or sell a security or invest in any apartment complex, nor is there tax advice, accounting advice, or legal advice. Investors bear the responsibility for your own investment decisions, your own analysis, and your own results. Investing, whether we're talking about the stock market or real estate, all investing and trading involves a high degree of risk and losing a significant amount of money, according to the lawyers. And it's true, folks. Look, all jokes aside, sarcasm aside, investing carries risk. You need to do your own analysis so you can know how serious those risks are and if they can be mitigated, and how come up with all that plan. That is up to you. Should you want personalized financial advice, please seek a competent and preferably licensed individual in your area. All right, this is the U.S. stock market, technically the SPY, which is an ETF that follows the S&P 500. And I took this picture the morning of January 7th, 2025. This is a monthly chart. I believe we're looking at 20 years here. But when I look at this chart, I see how fast we have run up compared to some of the other time frames. I see how far away we are from these moving averages. Dow theorists may be saying that this looks like the end of a wave 3, maybe the wave 5. And Fibonacci folks are probably just chomping at the bit to go run your projections on this little turn here to see if we are at a Fibonacci resistance line. Folks, all I'm saying is that I think that, and you know what? I forgot to mention the decreasing volume. All of these are signs, in my opinion, the way I analyze stock charts, that I think the upside may be limited for the U.S. stock market. I have to be real careful what I say here. I'm not saying that it's not going to go up. I'm not saying it's not going to continue up. I'm not saying it can't go up. All I'm saying is that we've gone really high really fast, and I think we may be overvalued. Now, here's some better charts to show why I think we may be overvalued. This is the Shiller PE ratio. This is how you spell it right down here, SHILLER PE ratio. You can Google it and find your own charts, do your own analysis on what this means. But what this chart does, it takes the value of the S&P 500 and it looks at the price to earnings ratio, right? So how much are we paying for the average stock price for $1 of earnings? And this is adjusted for inflation going back to 1880. So right here in 1929, we can see that the PE got a little bit over 30 before we had the big stock market crash of 1929. You can see this rollover in the late 60s, and the Vietnam era started when the price to earnings was around 24. Now, I think it would be reasonable to say, hey, with computers and AI and the online trading platforms that a lot of people have access to, we're in a different market than we were back then. Cool. Here is, looks like we got almost up to 45 when at the 2000 dot-com bubble burst. Notice right here, this is where 2007, 2008 market rollover happened. We were below 30 at this point. And then during the, looks like at the COVID rollover, actually, I went and looked at this. This was 37.96 PE ratio. Currently, we're at 37.96. The second highest PE ratio ever recorded was 37.97 let me rephrase that. The second highest reading on the Shiller PE ratio, this peak right here, was 37.97, which means when I took this picture this morning, we were the third most overpriced in the history of the Shiller PE ratio, and we're 1 penny off of second place. Again, this means, in my opinion, that the U.S. stock market is overpriced because the PE ratio is a measure of what you pay and what you get. And again, like I said, we're currently the third most overpriced, about to cross into the second most overpriced. So you need to study price to earnings ratio, what it means. But for me, it's kind of like a cap rate. It's a multiplier. When you're going to go buy a stock, the reason you're buying that company is because you want to get a piece of the earnings, right? And so what multiple are you going to pay that makes it a good value to you? If you were to buy a stock now, do you want to wait 37.96 years before you get to break even? I don't. But that is one way to look at the PE ratio. Let me show you another one. This is called the Buffett indicator. And if you go to currentmarketevaluation.com and you look at Buffett indicator, or you just do an internet search for Buffett indicator, you'll find this article at currentmarketevaluation.com. The Buffett indicator takes the value of the U.S. stock market and compares it to the entire gross domestic product of the United States. Now you can break the US GDP down into three pieces, and you're going to get big business, small business, and and government spending. So the Buffett indicator just looks at one of those pieces of the GDP and compares it to the whole. What has been completely shocking for a long time now is that the US stock market is actually double the US GDP. Some of you are thinking, how is that possible that the large companies that make up one piece of the GDP, how are they valued at double large business plus small business plus government spending all added up? Okay? Do you understand what I'm saying here? The numerator, the top part, this $60 trillion here, 60.86 trillion, that should be a part of the denominator. How is this happening? Well, again, the reason it's happened is because the market, in my opinion, is highly overvalued. So if I'm going to look to take my money and invest it in something, public equities, public business, the stock market is not where I'm going to go right now. You need to do your own analysis on the stock market. You can agree with me, you can disagree with me, but you need to do your own analysis. Oh, here it is. The stock market is strongly overvalued relative to GDP. Okay, that's what Warren Buffett thinks based on the Warren Buffett indicator. All right, are your investments truly diversified? I've been studying investing for, long time now. And I frequently ask someone, hey, how are you diversified? And unfortunately, way too many times someone says, oh, well, I've got some Apple stock, I've got some Tesla stock, I've got Amazon, Netflix, Starbucks, Boeing, some US oil, but everything that they talk about is a stock. Ray Dalio tells us that the 60% of the stocks in the market, they all trend together. So what we want to do, what Ray says is the holy grail of investing, is to get a handful. This article that I pulled says 10 to 15. Tony Robbins, I've heard say 8 to 12. But you want to get a couple of investment opportunities that are not correlated. Meaning if one goes up, the others don't go up, or if one goes up, you don't know that the others go down. They're completely independent of how they trend. They just are not related. So you want to find 10 to 15 of these that are non-correlated. They're diversified, meaning they're in different groups, different asset classes, different time frames, different all kinds of stuff. And you want an asymmetric risk reward, which means that if you are going to invest in something, you want to see that the upside of the investment is much bigger than the potential downside. So remember, when I look at the US market with my eyes, with my filters, just as I showed you, in my opinion, the US stock market does not have a higher upside than potential downside for the reasons that I've said before. All right, so what are the ways that you can diversify? Public equities, stocks, bonds, etc. And again, Ray has said that 60% of the stocks trend with the market. They all go together. So they are very highly correlated, which is the opposite of non-correlated. Crypto is another investment category that a lot of people can get into right now. Real estate is independent of the stock market. In fact, a lot of people like renting real estate rentals because if there is a slight recession, people that were living in houses tend to move into apartments, and that boosts the rental market. So you could say, and I'm bending the rule. So for those of you that are deep experts, forgive me here. But you could say that as the market or the economy, better said, as the economy weakens, real estate rentals get stronger. Other asset classes would be private lending. Some of my colleagues in my that invest with me might be familiar with private lending, hard money loans, private loans. Venture capital, that's when you put your money in on some businesses that you have no idea what they're going to do. Some of Shark Tank that you see on TV is kind of like venture capital. Energies, oil, nuclear. Energy is really big right now. There's a lot in this book. Tony Robbins and Christopher Zook just came out. Not just came out. Yeah, it was. I think it was 2024. But The Holy Grail of Investing, they talk a lot about investing. I really like this book. That's why I have it up there. Sports teams, very high barrier to entry. Metals, not just precious metals, but metals that will be used in manufacturing, like silver. Yeah, it's a precious metal, but the conductivity and the price of silver make it highly desirable. Commodities, if you've never traded futures, be really careful because you could end up with a herd of cattle on your front lawn. Those of you from my stock trading days know the jokes about all of that. You can also diversify across geography and time, meaning if you are highly invested in U.S. companies, maybe you want to invest in some Asian markets or European markets or African markets or South American markets, but invest based on geography and also time frame. Okay, that's a lot. I went to a Tony Robbins Wealth Mastery seminar in June of 2024, and Peter Mallouk was giving a speech, and he showed us how a couple of very wealthy people allocate their investments. Spoiler alert, real estate was the number one. Most people had 40% or more allocated to real estate. The second biggest was private equities, which means private businesses. You go into a business, say, hey, I'd like to put $100,000 in your business and get a share, 10% of your business or 5% of the income, right? You hear that on Shark Tank a lot. Hey, I'm asking for $100,000 in exchange for 12% of my business. That's what private equity is. So most of them were around 25 to 30% of their portfolio was in private equity. Again, you got to know people to get into private equity. Public equities, these are like stocks and bonds, is about 15 to 20%. And then the rest they called alternatives, like energy, sports team, metals, commodities, VC, all of those kind of went into alternatives. Here is a quote from the book, The Holy Grail of Investing. And it pertains to real estate, which is, of course, what I really like to invest in. It's why I think it's a good time to invest in real estate right now, because I do believe the stock market is overvalued, and real estate is where many of the wealthy people have the most of their money allocated. So that's where my family is moving our money to get into that 40% allocation. Actually, we're going to be a little bit higher than 40% allocated in real estate until we can overcome some of the barriers for energy, sports teams, that type of stuff. All right, the quote, tax efficient income, potentially unlimited tax deferral and tax avoidance of all capital gains upon death. Now, there's some entity structure there. There's some work to do with the CPA and legal teams. Some of that may be described in the Holy Grail of Investing book, but we got some entity structures to achieve that. Okay, that's not just your, hey, I want to buy a rental property. Tax efficient income, potentially unlimited tax deferral and tax avoidance of all capital gains are precisely why many of nation's wealthiest families are real estate dynasties. That's on page 108 if you want to go get the book and read more about real estate and why they love it. Folks, the reason I've been talking about this for so long is because this is where I am doing my real estate. Okay. I am looking at commercial multifamily real estate. It is running a business. It's a private business, what I am going to be doing. So it's kind of private equity. I've been actually sharing some notes today in my real estate mastermind of, hey, is it real estate and private equity? Some people said yes. Most people said no, Brad, the context that I'm using it, it's a real estate investment, not necessarily private equity. There's the information. You make your own decisions. But the point is, a lot of the people that I know, they think they're diversified because they have a bunch of different stocks and ETFs, but they are almost all in the stock market. And my suggestion is to consider diversifying with real estate and some of these other opportunities. Groovy. Why I love apartment investing away from the finances, folks. Look, when I go and provide, when I buy an apartment complex, I'm providing the basic need of shelter. If I buy a stock in the stock market, like Apple, like Boeing, like Amazon, like Netflix, none of those are basic needs. Okay. This is, people got to live someplace. The reason that the government, the US government offers all those crazy tax incentives is because for years and years and years, the number of new home builds and apartment builds has been less than the number of households increasing in the United States. Let me say that a different way. The number of US households and the need for shelter has outpaced our ability to build new places for people to live by a long shot for a long time. Don't take my word for it. Go look it up, get your own numbers. But I get to provide the basic need of shelter. And I'm going to add one more thing. I have gone to properties where I have seen kids, babies living in conditions that I don't feel safe in. And I don't mean bullets flying through the walls. I mean bugs everywhere, junk everywhere, dirty, mystery fluids in the carpet, seeping from the ceiling, dripping. And, you know, these kids are barefoot. Sometimes they're barely clothed. And I am fully clothed wearing boots, and I cannot wait to get out of that place. Folks, some people, even in the United States, as blessed as we are, their shelter conditions are awful. If you invest with me, I will not be doing that. I don't care what the finances look like. I will not live with that. To me, there's judges in white robes and judges in black robes. I care way more about the judges in white robes. I will be providing the basic need of shelter in a good quality way for people that are in need. I went to the beach with my family over the recent holiday, and when I left the beach, my net worth was higher. How would you like to go on vacation and your net worth grows while you're on vacation? Tony Robbins has a great story. I don't want to ruin Tony Robbins' story. All right, my point is, if you invest in this apartment investing, I will be active. The point is so you can be passive. Okay, you invest. Yeah, I will be giving you reports if you invest with me, but overall, you're not making decisions. You're not having to place tenants. You're letting me and my group run the business for you. It's passive. Another thing that I love about apartment investing, oh, I didn't even get to talk about the investment opportunities. So not only is the investment passive, it's diversified out of the stock market, which a lot of people need. A lot of people are looking for ways to invest that's not in the stock market. And the returns, you have to decide if they are the right returns for you. I love getting cash on cash returns throughout the year. And then in 5 to 7 years or whenever that particular asset, we sell it, you get more money back if everything goes correctly. So you can grow your principal and get quarterly or annual payments during the investment. That's what we go for. It doesn't always happen. Nothing is guaranteed, but those are the investment opportunities that I look for. Again, contact me when I've got one and we can talk about the projections and talk about if that is right for you. We'll talk about the risks. We'll talk about all of the stuff so you can make as educated a decision as possible for you. Another thing I love about apartment investing is I get to create jobs, right? There's got to be people that come out and do repairs. There's got to be people that do the property management for me. Landscapers, pest control, you name it. I pay local workers to work at the apartment complexes that I partner in. Let me say this, a lot of the best and highest tax income school district and first responders, there's not usually a lot of apartments there. Sometimes there are, right? I got a 232 unit deal in Nashville that I'm working on right now in a very nice neighborhood. And we will be paying property taxes towards the schools and first responders. But a lot of the best opportunities for apartment investing are C grade apartments in C or B grade neighborhoods. That's a lot where I look. And you know what? We're paying taxes to the schools and first responders that need them the most. And that makes me feel good when I am choosing to invest like that. And yeah, I get to generate income for my family. It really is a win-win-win-win-win. Some of y'all know that's my email address, the name of maybe the first LLC I created. At any rate, these are all reasons why I love apartment investing. I don't, if I'm going to invest in the stock market, I don't get the same glowing feeling knowing that I'm doing this for our society. So yeah, Win-Win Financial Solutions was the name of one of my first LLCs as I jumped into real estate. Folks, I have explained to you why I think that the US stock market is overvalued right now. You don't have to agree. You should do your own analysis. And then I talk to you about why I like real estate, because I get to diversify, because talk to your lawyers and your accountant. But for me, I get some tax advantages. And I feel good about how I am diversifying for my family and doing a service for the community all at the same time. If you want to learn more about investing in apartments with me, scan that QR code. Also, if you're interested in buying or selling a house in the state of Indiana, or you know someone who is, scan that QR code and get me their information. Folks, thanks for watching this long video. I appreciate your patience. No matter how you invest, your time, your love, your money, or your energy, always invest on logic, not on hope, and diversify appropriately. God bless you.